Hello friends! Today's topic is an extremely important law related to cash transactions that regularly happen in trade and business. This video post is especially valuable for freelancers, business owners, whether individuals or any other business entity. So what is so important? Well, as per Section 6050I of the IRC, if a trade or business receives over $10,000 in cash during a single transaction or two or more related transactions, they must file a report with the IRS on Form 8300. This form helps the IRS and other government agencies track and monitor potential money laundering and other illegal activities. There are three types of transactions that require Form 8300. 1. The receipt of more than $10,000 in cash from a single transaction. 2. The receipt of more than $10,000 in cash within a 24-hour period. 3. The receipt of more than $10,000 in cash in connection with a trade or business. So, who is this cash reporting law going to affect? Well, following types of people or business entities are required to follow the cash transaction reporting law. Individuals carrying business in sole proprietorships or freelancing. Partnerships, corporations, limited liability companies, charities, and nonprofit organizations, professional service providers such as lawyers and accountants, etc. Now the question, what happens if you do not report the cash transaction to the IRS? The answer, like any other contravention of the law, is easy. You will have to pay the penalty as per Section 6721 of the IRC, under which penalty of $250 for each failure and an intentional disregard of the requirement can result in a penalty of at least $25,000. What is the meaning of cash transaction? Does the cash only mean U.S. currency? The answer is a big no. The meaning of cash also includes foreign currency and certain monetary instruments like cashier's checks, bank drafts, traveler's checks, or money orders with face values of $10,000 or less. Just note that the actual provision under Section 6050 mentions the phrase related transactions. This term, related transactions, can be particularly important if there's a suspicion that large transactions have been broken down into smaller ones to avoid reporting requirements, a practice known as structuring or smurfing. Let us move to the actual Form 8300, what information it needs, and the time limits to file it. The information required on the form is obviously targeted towards knowing the basic information about two parties who deal in cash. So, you need to fill out Form 8300 with the following details. 1. The name, address, and taxpayer identification number of the person or business receiving the cash. 2. The name, address, and identification number of the person or business providing the cash. 3. The amount of cash received. And 4. The date of the transaction. What is the time limits for filing Form 8300? Form 8300 must be filed within 15 days of the cash transaction. If the transaction occurs during the course of the business day, the 15-day period begins on the next business day. If the business receives multiple cash payments that total more than $10,000 within a 12-month period, Form 8300 must be filed within 15 days of the receipt of the final payment that causes the total to exceed $10,000. How do you file Form 8300? There are two ways. 1. First is an e-filing system using FinCEN's BSA e-filing system. You'll receive an electronic acknowledgement of each submission of Form 8300. 2. The second option is to mail the Form 8300 to the IRS at Detroit Federal Building, P.O. Box 32621, Detroit, Michigan 48232. Please check the address on the IRS website before taking the steps. I hope you liked the video. If yes, please subscribe and like the video as an incentive to the team at irstaxapp.com. Thank you.